Warren Buffett has never invested in Bitcoin. He has stated that cryptocurrency does not create value and has compared it to gambling. However, what if I told you that his methods could make you one of the most profitable investors in the cryptocurrency world? Buffett's strength is not in holding Coca-Cola or railroad stocks. His secret lies in how he thinks when making decisions, where to look for opportunities, how to cut out the excess, and how to wait for the moment when the market gives you everything you need. If you apply this mindset to the crypto market, you will begin to see opportunities where others see noise and make money where the crowd is losing. Today, we will piece together his strategy, from the ability to find value where no one else sees it to controlling your emotions when the market crashes. And perhaps this will be the most unexpected lesson from a man who has never bought cryptocurrency. Just imagine, Buffett has thousands of tokens in front of him and not a single familiar name. Where will he start? When Buffett bought Coca-Cola shares in the late 1980s, he wasn't betting on short-term growth. He understood how the company made money, who its customers were, and what would keep those customers in the future. For him, the share price was simply a door through which he entered the business. In crypto, instead of offices and factories, there is blockchain, developers, and an ecosystem. And if you approach them with the same questions that Buffett asks companies, the logic remains the same. Understand how the project makes money, who uses it, and what will keep those users in the future. If you don't have this understanding, then every time you buy an asset that you don't know from the inside, you are simply throwing your money away. The difference between Buffett's approach and that of a typical crypto investor is huge. In the stock market, he selects companies with revenue, brand, and competitive advantage. In crypto, most people get involved in a project just because it's growing or people are talking about it. This is equivalent to simply closing your eyes and choosing a token at random. If we apply Buffett's approach to crypto, then before each purchase, it is worth asking three simple questions. First, where does the project get its real money from? Second, what prevents a competitor from copying this product within a month? Third, why will users still be here in 5 years? Buffett is willing to wait months before investing. In crypto, this approach seems too slow, but it is precisely what saves capital. When you know that you have bought a business, not a picture on a chart, volatility stops being the enemy. Now let's look at the crypto market through Buffett's eyes. There are thousands of tokens, but he would choose only 3. My guess is that they would be Bitcoin, Solana, and Chainlink. Now I'll explain why these 3 tokens. To do this, let's go back to the 3 questions Buffett always asks himself before choosing an asset. The first question is, where does the project get its real money from? Buffett never invests in a business that he doesn't understand how it makes money. Bitcoin is unique here. Its value is based not on revenue, but on scarcity, trust, and its status as digital gold. Solana generates revenue from transaction fees, business integrations, Jito MEV, and staking, without slashing, which reduces risks for long-term investors. Chainlink earns money from Oracle services that power thousands of DeFi protocols. The second question is, what prevents a competitor from copying the product in a month? Here, Buffett is looking for what he calls an economic moat, protection from copying. For Bitcoin, it's the scale of the network, the level of decentralization, and the brand, which cannot be replicated. Solana is protected by its unique proof-of-history architecture, an already established ecosystem. Chainlink has technological leadership and long-term partnerships that cannot be easily replicated. The third question is, why will users still be here in 5 years? Bitcoin will remain as a global reserve and protection against inflation. Solana, because of its high speed, minimal fees, and growing number of applications in DeFi, NFT, and real business. Chainlink, because without it, blockchain protocols will not be able to obtain data from the outside world. As a result, the choice narrows down to 3 assets. And it's not about the magic of numbers, but about the fact that Buffett always kept the core of his portfolio compact so that he could know each asset like his own business. He would rather have a deep understanding of 3 projects than a superficial grasp of 20. Because in investing, it's not the person with the most tokens who wins, but the one who best understands what they hold and why they continue to hold it, even when the market is stormy. But the story doesn't end there. Knowing how to choose an asset is only half the strategy. The other half is knowing when to buy it. Buffett doesn't chase prices. He waits for the moment when a business can be bought at a discount, sometimes for months, sometimes for years. Based on his thinking now, in August, it's definitely not worth buying anything. The fear and greed index is in the greed zone. The charts are redrawn highs, and Twitter is full of people who are sure that growth will continue forever. This is the very moment when Buffett would take his hands off the keyboard and just wait. June, on the other hand, is the very moment when Buffett would start to act. His entire career is built on one technique, buying when the majority is selling and doesn't understand what it's doing. The crowd is in a panic, and he calmly collects what will bring profits in years to come. Remember June? Bitcoin was around $100,000, Solana was cheaper than $150, and Chainlink was $12. Not because something happened to them. It's just that the market decided it was time to be afraid. And among all this noise, Buffett doesn't rush to the sell button along with everyone else. He opens his notes, takes out his calculations, and asks one question. What has changed in these assets? The answer is nothing. Bitcoin is still the main digital asset that has survived all bear markets. Solana processes hundreds of thousands of transactions per second and is growing faster than its competitors. Chainlink is a service without which half of the DeFi industry would not function. The only thing that has changed is the price and the opinion of the crowd. And this is exactly what Buffett has been doing his whole life, buying when value remains and entry becomes profitable. This is where the main difference in Buffett's thinking comes into play. The crypto market is not like stocks with quarterly reports and slow price movements. Here, a single piece of news can change the mood of hundreds of thousands of people in a day. Today, the crowd is confident in eternal growth. Tomorrow, it panics and sells everything in sight. Buffett became a successful investor precisely because he did the opposite of what most people did at such moments. He invested large sums of money when the market was trembling with fear. Look at the chart. From July 28th to August 2nd, Solana fell by 20%. I'm not saying that Buffett would rush to buy every fall, but one thing I know for sure, he would have had funds set aside in advance for just such situations. And that's another important rule from his method. Always keep part of your capital in reserve so you can use it immediately when an opportunity arises. Because in this market, it may only last a couple of days. I usually trade crypto on Evedex. It's a decentralized exchange where you have complete control over your funds, no intermediaries, and no account freezes. No KYC is required. Just connect your wallet and trade directly from your balance. Commissions are lower, speeds are high, the interface is like that of top CXs, and there is leverage of up to 100x, but only for those who know how to control risk. I'll leave the link in the description, because in this market, an opportunity may only last a couple of days, and you need to be ready to take full control of it. Buffett also has the flip side of the strategy. He doesn't just know when to buy, he knows where never to go. This is especially important in crypto. Here they know how to make trash shine brighter than gold. Huge banners on CoinMarketCap, TikTok videos with insider information, promises of X100 this month. All of this is bait for those who don't think, but act on their emotions. Buffett would stay away from tokens without a real product. A beautiful website, 50-page white paper, and 0 users. That's not a business, it's a presentation of a dream. Projects that promise guaranteed returns. Buffett always said, if something sounds too good to be true, it's probably not true. In crypto, it's almost always a scam. Hyped trends without protection from copying. Today, it could be a meme coin or the latest revolutionary NFT collection. The problem is that tomorrow, anyone can launch an exact copy and take away the audience. Teams without transparency. If you can't understand who is behind the project, how it makes money, and where the money goes, Buffett won't even open the chart because he's not hunting for quick money. He's building capital that will work when others have already lost everything on the next dream token. But what to do if you are just starting out and are not yet sure how to apply all these principles in real trading? Then the easiest way is to start with a proven tool, the OWL indicator. It shows the entry zone, stop location, and targets without manual marking. This is not magic or guesswork. It's a clear algorithm with understandable logic. I recently opened a trade on ETH. It brought me about $11,000. A special video with a full analysis and chronology is already on the channel. Watch it to see how an idea turns into a result step by step. The link to the indicator is in the description. So, today we looked at how Buffett's thinking, a man who has never bought crypto, can be your competitive advantage in this market. We looked at what projects he would choose when he entered the market, what he would stay away from, and how he would make money even in a sideways market. But now the question is for you. Will you, like most people, panic every time the market drops? Or will you be able to wait for the moment when the market itself gives you the best at the lowest price? If you chose the latter, put a like and write in the comments which of Buffett's principles you will apply today.